So break this down for me. What time do you wake up?
I'd wake up 5:30.
Oh, God, I hate that that's your, like, I know you're telling the truth, and I hate that because I'm always on the lookout for like successful people who are like, I get up at 10 a.m. and you just do not find them.
I will say this, I didn't used to be a morning person. I would wake up at 9 or 8:30 every morning. I would stay up till about 1 a.m. every night. I would go to the gym at around midnight. I had very odd hours. And so that completely flipped.
I have to say, being a 9 a.m. riser in college does not make you not a morning person. I hate to break it to you, but like noon in college is not a morning person, and you mature into a 9 a.m. person.
Three, two, one,
Hello, everyone. Welcome back to another episode of Between Two Layers. I'm Carly Reilly, and I'm, of course, here with our co-host, Robbie Ferguson. Hey, Robbie.
Hey, Carly, good to be here.
I'm pumped for today's conversation because we are going to dive into raising venture capital, which is something you have done very effectively and which many people out in the world want to do or want to do better. Valuations in the space at large, thoughts on that, and talking about like startup life generally, which you and I both at very different scales have a sense of and are a part of. Also want to give all sorts of updates on what's happening in IMX or get the updates. You just announced some cool stuff with Des Bryant and Personal Corner, and I know you've announced a lot of new games recently, so we want to get into all of that. But before we dive in, we do need to encourage everyone who is watching this, if you are listening to this, subscribe wherever you are. If you are on the podcast app on Spotify or Apple, go ahead and rate and review this podcast if you are enjoying it. And if you're on YouTube, you got to go hit subscribe. Robbie, you insert here your call to get people to subscribe.
Yeah, come follow our Twitter, Immutable OX Ferg.
And smash that like, subscribe button, as the YouTubers say. Awesome. Okay, Robbie, why don't you give us the latest of what's been going on at Immutable X? You've had a lot of game announcements, I feel like, coming out. Can you speed run us through everything that's going on?
Yeah, I mean, it's been pretty insane, the growth over the past 3 months for Immutable's game onboarding. So we've done more games on board in the last 3 months than in the previous 2 years combined. I think it's off the strength of our product hitting a real sweet spot as people start to build actual real games, which have tens or hundreds of millions of NFTs, but also just the strength of our go-to-market team, which is over 80 people strong today. And one of the things I wanted to call out is like we just had the Riot Games CEO start building a MMORPG on Immutable from Amber Studios. We had RCTAI, so the Delicium team, start to build a MMORPG slash multiverse on Immutable. We have Deviant's Factions, who migrated over from Terra. We actually have more than 15 migrations from either competing sort of L1s or side chains, which are moving over to Immutable. A lot of these aren't announced, so keen to announce these soon. We have Undead Blocks, Wagner Defense, Eden Brawl, Rarible is going to be launching imminently. I think they've done a soft launch, and obviously GameStop very, very soon. Nifty League, Kiroverse, World Wide Web 3, Gossamer, Wagyu Games, Cross the Ages. This is all literally last 6 weeks. So the amount of meaningful games, yeah, it's been actually really awesome just to see the level of sort of credibility that we can have with these games, so we can talk them through. Actually, here's how we are going to approach some of the core problems that you're having problems with because of the work we're doing on the studio side of the business. So that's really awesome to see. And of course, Aglet just became one of the top 3 Web3 games in the world. And my favorite thing is that they built on Immutable self-serve. So they didn't even talk to us during the building process. We only found out about them when we found the telemetry data of them using our APIs. And of course, we now work with them very closely. But I think that's a strength of the product that we built today, because Web3 is not going to go mainstream unless it is ridiculously easy to build in. The reason Stripe was such a successful platform was anyone could build on it using very simple APIs that you didn't have to have any complex engineering or financial expertise to build. We're going to do the exact same thing for Web3. If we want 10,000 game devs to build games on it, if we want trillions of dollars of financial instruments or houses to be built on this, it has to be super easy to use. You can't be forced to use proprietary smart contract languages or sort of muck around with knowing what security paradigms like reentrancy bugs are, which are pretty much novel to Web3. It is far too complex an industry.
So speaking of games, and I've talked about this a couple times on the show, because what I love so much about your story is that you started by building a game and then we're like, oh, wow, I can't scale this on Ethereum mainnet, so I'm going to solve my own problem and build an L2. And I feel like that philosophical backstory of Immutable X is fairly well documented. But you were, what, like 19 and built a game, and then we're like, oh, now we're going to actually build like a whole layer 2 blockchain. Like that all takes money. And I'm so curious. I've been doing a bunch of reading about like the history of the games industry. And from what I understand, it can be really hard to raise money for a game, in part because VCs often don't really understand them. How did you get the capital, or did you bootstrap? Like, how did you initially build Gods Unchained?
Yeah, so I mean, the initial game was completely bootstrapped. I think the budget was less than $5,000, and obviously we made some revenue from that, which we're able to put towards sort of reinvesting into building Gods Unchained. The other thing I'll say is just it's incredible what you can do if you just have 6 to 8 highly motivated people who understand every part of the product you're building and communicate very quickly. So you're all in a room together, you're all working on this for roughly 18 hours a day. And it's very easy for you to build everything because you're both the product designer, the product manager, the UX designer, the front-end engineer, the back-end engineer, the smart contract designer, the smart contract engineer. And when you combine all of these roles into just very small group of people, the efficiency is crazy. You don't have how do we align on product or strategy. And the other thing I think is you're just building kind of natively what you know people want. And as you get larger, you have to kind of start getting much more structured about this for an organization, but you have huge efficiencies. Like you can get done with that team what will cost, a Silicon Valley company $10 million a year in operational costs to hire that capacity in.
So you said 6 to 8 people. So, but I know like you and your brother James have this concept for like a blockchain game because you guys like blockchains, and then you persuade 4 other people that like there's something here, come hang out with us.
And then we brought Alex
just you and James.
And obviously Alex, our co-founder, joined like a month in. But it was really until Gods Unchained, and then we started making a few hires. But the efficiency of those people, I think, is just really high. But like, me, James and Alex were pretty much pushing together most things for the first 4 months, and then we started hiring people in.
Were you at university?
No, so this was over the summer holidays of university. So I was in between second and third year. And then we didn't go back on the third year. So
one of those.
Yeah.
So, and this, you speak about this like it predated Gods Unchained. So there was like an initial prototype that wasn't actually yet called Gods Unchained that you guys just bootstrapped and that you put out in the world and people started playing and making money.
Yeah, and then we started working on Gods Unchained pretty quickly as well, and focusing a lot of efforts on how do we fundraise and start to scale the team. And that's when we went to New York and fundraise from Coinbase, and that really, I think, helped be a catalyst for the next year of growth.
And at that point, your pitch was for Gods Unchained and Immutable X, or it was only focused on Gods Unchained as a product to fundraise for?
We actually, no, we always wanted to build a platform because we're not game developers. What we knew is that in order to build a successful platform, and I have all the original decks, it's really how do we build a game that can be the proof point and example customer of what the ideal platform looks like. Because you have to remember, no one knew what Web3 games were. No one even knew what NFTs were back in March, April, May of 2018. And it was also in the middle of one of the biggest bear runs of all time. So you didn't have a whole bunch of excess demand or capital flowing into the space. And so what was crucial was how do we build a product that people actually loved and used and had genuine innovative product market fit, not some, DeFi example that was being propped up by incentives, but really transforming the way people played games. But the goal was always use that, make it massive, and then build a platform that both services that and any other games trying to build this.
And so you get a meeting with Coinbase to pitch them this. Now, I understand the ecosystem was much smaller, so the number of people on chat rooms talking about it was smaller, but like, how did you get that meeting? And then was it like an easy sailing through? Coinbase is like, sure, we're desperate for anybody who's building anything cool in this space. Here's the money. How did it go?
Look, no, obviously not. I think Coinbase was pretty selective and has built up a really strong actual. I mean, they've had one of the most successful corporate venture arms in history. If you look at the returns on what they've been investing in over the past 4 or 5 years. And I think that's actually been fantastic for Coinbase's brand as well. As you know, if you're 5-7 years old in crypto, you're almost like a dinosaur in crypto, which is kind of the funny thing, right? So I don't remember how we got introduced. We got introduced somehow. We met with the team, and then we kind of fundraised with them and a few other hedge funds and VCs based out of Asia. And that happened pretty quickly. I think that happened in less than 2 weeks.
Do you have advice for folks who are really at that early seed stage, who are 20 years old or whatever you were? Like,
look,
Web3
VC is still pretty strong. Web3 VC is still pretty strong. I mean, we're having it is by far the most resilient segment of venture capital out of any industry right now. And within that, gaming is even more resilient, right? We've seen nearly $9 billion invested now. Gabe Layden recently raised $200 million, the founder of Machine Zone, for his Web3 startup. We had, Animoca raising another $110 million. It is one of the most there is so much money going at Web3 gaming right now that if you want to build one and you have some form of credible background, you're not going to have trouble raising. I can't guarantee what valuation you'll get, but it will be mainly dependent early on your history and the history of your team, unless you actually have product traction. My suggestion is really just sort of ship with urgency, focus on getting the right VCs and partners on board, because it is going to be a long-term relationship. You want to make sure that you have a high degree of trust with them. They can bring expertise, they can bring value. I've personally found the highest form of value they bring is just relationships. They're not operating partners in many cases. Some of them brand themselves as that, and they can be useful, but by far it's going to be referrals to key hires, referrals to key networks, or customers or partners that you're looking on bringing on. And the selection of those being right is really important. The Coinbase brand was a really valuable signal back in those days, which is why we prioritized them as a partner. Same thing as the remaining rounds. We wanted gaming strategics, so we went and got one of the best gaming strategic firms in the world, Bigcraft and Galaxy and Web3. We wanted growth partners who could lead around at any size the future of Immutable, which is, Process / Naspers, which has more than $300 billion under management, and Temasek, which is effectively a branch of the Singaporean, sovereign wealth fund funded VC. And so at each stage, it's deciding what is the kind of capital and use and strategic value that you want these partners to provide. And thankfully, the VCs that we've worked with, I speak incredibly highly of, and I think they've been incredibly highly value add.
Something that I think a lot about is from the perspective of people who are joining startups. I'm in this funny position right now, which is I've never raised capital, but I'm actually in this crazy moment, to speak to your point about there's still a lot of money in crypto, where I have people coming to me wanting to give me money for my LLC, which houses various things I do. And I'm like, this is a bizarre situation to be in, where I'm like debating if I want to take people's money or not, because they're kind of coming at me for it. But I have been in the position before of joining startups. So I really know that side of the table as well. And something that I think people do not do enough is really take the time to understand companies' valuations and what they've last fundraised at before they join the company. And this is so critical, because we saw what can go wrong with this in this last bull market, where if you think about all the companies that raised money at crazy valuations that fundamentally they're not going to be able to sustain, and all of the employees that joined with equity based on that valuation that are going to be underwater now and may never come back. So like I've counseled friends on this kind of stuff when they've been looking at startups, is like, make sure you understand the valuation. Make sure you think for yourself, like, is this valuation reasonable? Because if it's not, you're screwed.
Exactly. If you're going to invest in a company with cash, you would think about how is the value, what's the growth prospects. You're investing much more than that, which is a
or
good
what's
chunk
the
of your
meme
life.
potential here? There's other things
Sure.
people now look at for stocks. No, but of course, it's exactly right. I really do think people don't get this. Understand what your equity percentage is as it relates to that overall valuation, what you think the total size of the market you're entering is. So speaking of all this valuation stuff, like, you've raised in bear markets and bull markets. Did you feel like there was a difference when you were talking to these VCs, and how did you play it differently at all?
Look, it's always pretty similar, to be honest. Obviously, the main difference is perhaps the time it'll take to pull a fundraise together. But I think Immutable's been. I think if you can kind of build through a bear run and prove traction through a bear run, the capital is there. And the main difference is just does money get thrown at silly stuff? And I think we see a lot less silly money being thrown around in bear runs, and a lot more sort of discipline on especially later stage investments. But the Web3 venture space is not going away. All these funds have raised enormous multi-billion-dollar sort of funds that have to be deployed, and they're looking for great companies to put them in.
Y'all launched your fund, which was to help fund awesome games, right? And maybe speak a little bit about that. I mean, do you consider that sort of like a venture arm of Immutable X?
Yeah, so I mean, the whole goal there is how can we strategically help the games building on us and working with us to be successful? And I mean, that's a mixture of Immutable grants, it's a mixture of cash, it's a mixture of our venture network. And the goal is how can we help the biggest games working on us sort of find the right access to capital, but also early stage games sort of get the capital they need to get off the ground. And every grant that we do is all vested. It's kind of long-term incentive aligned, and then sort of cash and our venture network are there for if people actually need capital to go and fund their initiatives. But I mean, the reaction we've seen is that has been pretty insane, which has been awesome. And I think it's a testament to sort of Immutable's in this unique position where we pretty much know every Web3 game building in the space right now. And I think that a lot of VCs want access to that and to be able to sort of, double down on the games that we're seeing.
So the goal, it sounds like for you guys, is less like we need a return, which makes sense, and much more like we want to see these games succeed and be on our platform to drive more people to our ecosystem.
Look, I think it's always important to be clear what your goals are. There are some parts of it which is if you want to do this kind of check size, it's going to be a clear financial return. But there's some parts where it's more strategic alignment and helping these games get off the ground. Yeah.
Got it. So I've been doing a lot of digging on just like the history of various industries, gaming being one of them. I've been reading a book on the history of Spotify, and something that is like very striking to me is like Spotify seemed to just like make up their valuations. Like they were basically like, we needed to raise another $200 million. So I guess we're valued at $1 billion now, and we'll get some VCs on board to support that. And then as I've expressed, like I've had some people coming to me wanting to give me money, and I'm like sitting here like, calculators and spreadsheets being like, well, gosh, if my like sponsor revenue is this, like what's a multiple on that EBITDA or revenue that could make sense as a valuation? Like, am I just doing it wrong? Like, am I a schmuck? Should I just be like throwing out random numbers? And like, how does this work?
I think it's look, it's ultimately a market driven process, right? So you have VCs bidding on what value they want to ascribe to your company. And then the choices that you make on who to go with are going to be a combination of price and strategic value and brand. And sometimes you will go with someone who did not give you the best price because you think they'll give you more strategic value, they'll give you more brand. And that is ultimately what VCs want, right? That's their goal, is to not have to compete on pricing terms, but on other elements, which is why they actually end up developing quite good operational capabilities, really strong brands and marketing capabilities, as we've seen as some of the top Web3 VCs in this space. And I genuinely think that some of these VCs have some really clever people working in it that can be very highly value add.
The answer is I'm in the wrong industry and media businesses are terrible businesses and I need to get into tech, and then suddenly the rules are different and more favorable.
Well, I think it's ultimately as well, people don't know what the multiples of this is going to be. People don't know what the market sizes are going to be. And so it's pretty easy to value a business that is traditionally understood. We know what kind of multiples that genre will command: gaming, media, podcasts, SaaS, etc. And that's why I think the biggest hits to fundraising have not been in crypto, because the biggest hits are where people are investing in companies where the genre or the category of company is very well understood, and the public market comparables are getting smashed. So you have, for instance, D2C healthcare was absolutely smashed in the US. And then we had kind of companies which are in D2C healthcare really struggle on the private markets because they said, well, ultimately, when this goes public, this is the multiple's been reduced. Where I think it's totally different is this is one of the purest forms of category creation we're ever seeing. We're completely reinventing the way that value is transferred in exchange. Yeah. If you look at NFTs, let's take the gaming TAM alone, so the total addressable market. We have $100 billion being spent every single year on items that people don't own. It's growing 10% year on year. It's bigger than music, movies, and TV combined. And as soon as we turn it from a rental asset class to an ownable asset class, it's going to become roughly a $1 trillion opportunity. I don't see that to be glib. Every time an asset goes from being something which can't be owned to being openly tradable, you typically have secondary financial markets, options, derivatives, etc., built that are an order of magnitude larger than the value of the underlying primary stuff being traded. You know, we see this all the time in kind of the commodity sector, in
mortgages, mortgage-backed securities, sector. I would imagine, like
precisely, or futures on pork knuckles. You know, anything which has sufficient kind of that it exists, right? There's billions of dollars of these being traded, and it's because anything which has sufficient primary volume, we have these markets emerge. So even in gaming alone, you have essentially a $1 trillion trade per year opportunity that's coming online. Now, if you take it from gaming and you expand it to any form of unique value and how it's going to be exchanged, which is term deposits, which is houses, which is intellectual property. We see people taking on the music industry and reinventing how creators' rights and royalties work. This is truly the greatest market opportunity that has emerged pretty much since search, and maybe even bigger, depending on how the world ends up, because it's how we curate and exchange value.
Yeah, I'll give you one. I went to Puerto Rico earlier this year and met with a world-renowned tattoo artist who's based in Puerto Rico, and he's tattooed Daddy Yankee and Ricky Martin and all sorts of celebrities, and it's really expensive to get a tattoo by him. But moving forward, he's launching an NFT, or he's launched an NFT, and the only way to get a tattoo from him, I tried. He's like, I'm booked out. Anyways, I don't really fit the candidate for somebody who should have a tattoo. Like, I'm way too square and nerdy to like actually have one. But I was like, if this dude would tattoo me, I would do it just for the story. But he was like, no, I have other clients that I have to do. Anyhow, he's launched this NFT. The only way to get tattooed by him moving forward will be through this NFT. So inadvertently, and this is obviously not his goal, but like, this is basically a way to trade on the future value of getting tattooed by this guy. And
100%.
I mean, that's just an entirely new market. You're trading on the future value of this man's career, effectively.
And we actually have something very similar that a partner is building in Immutable today. I'm really excited to share it. We can't yet, but
oh God, you're gonna rung us like that? I was like, we're so excited to share this thing that I will not share. I mean, it's crazy. Folks talk about the financialization of everything as if it's like a catastrophe, or I think a lot of like the skeptics are like, oh, but I don't know, and maybe I'm just naive, and I'd love to get your thoughts, but like, do I think, at least in the short term, that like Goldman Sachs is going to be trading on tattoo futures? Like, probably not, because they're just not set up for that kind of thing. The people who are going to benefit from trading on this tattoo futures market are the people who love Juan Salgado and love tattoos and are like tracking that. It's not a big enough size yet, at least in these early stages, for like a Goldman Sachs to trade that. So that's why I think this
but
is
also
such
when
an
they do, it's not worse for people. Like the only reason that we can eat Big Macs, and I always get the exact one wrong here, but it was because back in the 90s, I think it was Bridgewater or some sort of hedge fund was able to put together a hedging contract around some of the primary ingredients of this burger that without it, their costs weren't stable enough.
Oh,
like
wow.
they weren't able to actually put together the food. So people forget that financial services exist to service people and stuff. Like that they exist for a reason, which is to improve utility and how we can build things and kind of managing the costs on things. It's essential, for instance, to the mining industry. You couldn't have mining industries unless they were able to hedge the future value of the stuff coming out of the ground. And we saw, disasters when this goes wrong, when the timing of the short options or the put options they put on the resources don't actually line up with their ability to extract them out of the ground. And so there was a rapid spike. I need to get the commodity, but it was a rapid spike recently, and one of the major mining producers basically was in a situation where they're completely insolvent because they have this huge put option that was due now on the price of the goods, and they couldn't get the stuff out of the ground fast enough to hit what was a pretty short-term peak in the price of the asset. And so that's when you have kind of markets malfunction. But ultimately, this stuff exists to service people.
I think the fear is around if you financialize everything, anything can become like a 2008 market collapse, right? Where you have all these folks trading derivatives or, like synthetic versions of tattoo artists' futures or like whatever. And these markets become so intertwined and so
that's
big,
why it has to
and
be
they're so
decentralized.
underregulated. Yeah. And there we go. And that's, I think, the key is like, you and I talked about this, I think, like, does the 2008 financial crisis happen in the same way? Or maybe it was with Gabe Frank, who runs a NFT like collateral loan service. Does 2008 happen the way it happened if it was all smart contracts and you had that full visibility? Like, probably not. Certainly not in the same way. You just have so much more visibility, even though it's super complicated, but you do, in theory, you can trace sort of like all the dynamics at play in a way that you couldn't when that was going down.
And when we saw the collapse of, some of these stable coins earlier in the year, it was the centralized kind of front ends we're actually not using the decentralized loan protocols or the decentralized stable coins. Like MakerDAO didn't falter, right? And so I think that's where we have to go, which is you can have as much leverage as you like, as long as the primitives on which it's built are transparent and there are constant market incentives for people to go and kind of try and break things. And I think that's actually excellent. The more we constantly have incentives to break things, the more we can know that the existing system and the Lego blocks that it's been built on are a bust.
That was the most frustrating thing to watch, was like the Wall Street Journal's coverage being like, DeFi's broken. Like, look what happened to Celsius. And being like, what? Like, you're the Wall Street Journal. Like, you haven't figured out that Celsius is like not at all DeFi and literally just a crypto bank. And I mean, that was something else. Okay. You're gonna, I think, cringe at this thing I'm about to say, but like, it is what it is, right? You're a unicorn founder. You're like, I know I'm sure you feel like you're just at the beginning. There's so much that IMX wants to do and so much in the works. But the reality is, like, you've done a thing that many, many people want to do and look up to, which is like start a multi-billion-dollar company. And like, how does that feel? Do you think about it? How has your life changed in the last 5 years?
Yeah, apart from a lot of growth, not too much. I think, look, it's a lot of hard work, but if you surround yourself with good people and if you focus on constantly growing, I think those are the most important things. Like, really candidly, I'd never built a company of 300 people before. And so what you have to learn is, well, how do you learn at every stage of being effective at one person, at 5 people, at 30 people, at 300 people? And that requires, what I found most helpful is just reading and getting coached, which is like, hey, this is the best way to create company structure and culture at this level of organizational size. And I think that you have to have this relentless attitude toward learning in order to be successful, particularly in crypto. Never before has knowledge been less useful and culture and knowing how to think been more useful. And that's true for every segment, not just crypto. Of course it's true in crypto, where the popular paradigms on creating products or DeFi or Web3 are changed every 3 months. The narrative on what is popular has changed every 3 to 6 months. We have things like SushiSwap's Vampire Attack, which redefined merger and acquisitions and will be written in history books, I believe, for centuries, that completely shifts how people think about network effects and moats. And so the most important thing is, how can we constantly stay at the cutting edge while retaining focus on a long-term vision and mission? And I think that's what Immutable has done really well, is since day one, it's been, how do we change the $100 billion players spend on assets and make it truly ownable? How do we empower players rather than having them constantly be scanned by a pretty exploitative system with zero digital property rights? The way we get there is changed. We spent a very long time looking at what tech infrastructure was right to scale gaming content. We looked into Plasma, we looked into state channels, we looked into side chains. We weren't happy with any of them. And so when ZK rollups came out, we said, hey, this is finally the thing. But I think that mix of being very happy to change the way you learn and the way you're executing, but with a long-term vision and goal is kind of essential.
Have you read From Good to Great?
I have not, actually.
So what's so funny, Robbie, about the fact that you haven't read that is I think about that book all the time when we talk, because what you do very well, and I guess it remains to be seen if it'll actually play out or turn out properly, but I'm bullish on y'all, is this like hedgehog concept idea that I think that gets laid out in that book, which is like to be very, very hyper focused on the thing you think you can be absolutely best on, right? And like the companies that go from good to great end up being just hyper selective about what they're focused on. And that's so evident in y'all's business model, is like we're very selective about partners. You know, you kind of lose out, quote unquote, on opportunities that get market attention, you know, because they go with another partner, but you've been intentional about doing that because you want to focus on gaming. So it always reminds me of that book, which I love, and it's a great one that folks should read if they're interested in business. But what are you reading these days, or like what are your favorite books that have taught you the most?
I read a lot of fiction during the week.
Wait, I love that. I wouldn't have expected that. I would have been like, Robbie's a straight nonfiction junkie, just like crushing
a lot of sci-fi
business books
and a lot of fantasy.
Okay.
And then I read a lot of nonfiction and business books on the weekends because I find it.
How many books are you reading a week?
I would read probably half a book a week.
Okay. All right. That doesn't make me feel too bad.
No, it's not crazy. I'm pretty busy. I aim for sort of reading a business book every month at minimum. I think that's pretty important. And then, fitting some fiction in there too. So
what is your like number one business book that you would recommend?
That's a good question. There'd be many. I would say it depends on the stage of business that you're at. If you're early on, I would highly recommend The Great CEO Within. It's an ebook. It will take you about 2 hours. It'll take you pretty much zero to hero on how you build a startup up to maybe 100 people. And you know, it's incredibly pragmatic, which I find really useful. It's actually written by the Coinbase CEO's coach, Matt Mokeri. And the next one I would probably recommend for culture is Radical Candor. I think it's a really important book. I think businesses by default tend to be not sufficiently candid, and a lack of honesty will kill your business. And
that's
also,
why we've thrown you on a podcast. Like, you want radical candor, Robbie? Well, you have to speak off the cuff for an hour, twice a week to the entire world, and you're like, okay.
and it's a really interesting book to read. I think it changed me quite a bit. I really also liked Radical Focus, which is just a pretty simple book. Yeah, exactly. Just really radical about everything. And this is just a very simple concept, which is like only focus on the very few things that matters. And it talks about OKR structuring and kind of weak structuring. I think it's a really good book for managers. And then at scale, I would recommend the book Scaling Up, which is just an incredible kind of approach for how do you structure an organization to succeed between the sort of, 100 to 10,000 people range. What operations and levers, and it breaks it down just incredibly simply. So I've been a big fan of that, and we try and operate that pretty well.
You referenced Brian. Why am I blanking on Brian's last name? Coinbase CEO.
Armstrong.
Brian Armstrong's coach. Do you have an executive coach?
Yes, I have two. Yeah.
What have you found to be like most helpful about executive coaching?
Everything. I think it's key. I find the biggest, you want Socratic coaches, you want coaches going to ask you questions, which generates the change from you rather than them telling you what to do. Coaching's value is not, hey, here's the answer to a problem. Sometimes, I think it should be about 20% of coaching. Hey, I just don't know what to do in this scenario. But the biggest value is developing you to have the insights and decision-making process that allows you to make the right decisions. Mm-hmm. And so, I find it hugely invaluable. I spend, Tim Ferriss has this concept that I really like around how do you kind of spend 10 times more money on the thing that really matters to you and not very much on anything else. And to me, that's coaching and learning. Like, I just love constantly seeing how I can upgrade and become better.
I've thought about coaching before, candidly, speaking of radical candor, because I was like in therapy, and all I did in therapy was talk about my work problems and like, okay, I'm going to leave this company and I'm starting my own thing. And do I want to take outside capital? Do I not? Like, I'm literally just, and she's not equipped for that. Like, you know what I mean? She's like, wants to talk about like my history and my friendships, my romantic relationships. And I was like, this isn't really what I need. So I haven't actually made the leap, but I've always been like, I feel like I'd rather have a coach than a therapist just right now in my life. I'm a big believer in therapy too. It's just like, all I think about right now is work. And so
Yeah.
matching that.
I mean, I don't, if that's the most important thing to you, I think you want to spend the most time on it.
Are you a morning person? Like, are you one of these like morning routine folks? Of course you are.
Yeah, look, I'm pretty structured. I'm a morning person. I'm not crazy structured. I think the big things for me are just a lot of exercise in the morning. I find keeps me sane. I need at least 7 hours sleep. That keeps me sane. I need to socialize every day. Very, very important to me. And I need to eat well. And if I hit those four things, generally always, pretty happy.
So break this down for me. What time do you wake up?
I'd wake up 5:30.
Oh God, I hate that. That's your like. I know you're telling the truth, and I hate that because I'm always on the lookout for like successful people who are like, I get up at 10 a.m. and you just do not find them. Like
it's just not really feasible
happen.
With that if you're going to the office. But like I'm not super rigid on any of this stuff. There's times where you want to change or kind of flex on different things, and I think that's really important to long-term sustainability as well.
You wake up at 5:30. What's the first thing you do?
First thing I do, well, I just got a cold plunge, so the new first thing I'm going to do is jump in the cold plunge.
Oh my gosh, you really are the stereotype.
But so I at the moment it would just be literally go to the gym. So like I would just immediately go to the gym because I'm pretty much not functioning until I've done that.
Do you have a home gym or do you go to a separate gym?
No, I go with actually my two co-founders. We train together every morning. It's a great way to just like really creative energy. We can chat about ideas and then just work out.
And you said it's like an hour. How long do you work out for?
Yeah, anywhere between an hour to 2 hours, depending on what I'm doing. Yeah.
And are you like one of these, like I know Zuckerberg recently said, he's like, I do MMA fighting because it best keeps my mind off of work in a way that like running won't. What do you do?
Yeah, I box, which I find really fun, and you have to be completely focused on boxing or you can't, you won't do it well, and I'm not good. And then I also do a lot of powerlifting and kind of weightlifting, which I really enjoy. Yeah, I'm not a big runner. I do have a Peloton and I do Peloton, but I definitely enjoy the weightlifting more.
Okay, so you're there for an hour or two, boxing, weightlifting. We're at now a whopping 7:30. Carly is now rising over here on the East Coast.
Yeah.
And breakfast, what's coffee? What's your next move?
Coffee. Black coffee.
I will give you credit. At least you're not like, well, then I like pulverize my goji berries and sprinkle in the chia, whatever the heck.
Yeah, and look, some mornings I'll have, milk and coffee, and I'll get some tiny teddies and a croissant, and I'll just, be like I'm having a nice morning for myself. So it's definitely not something I'm sort of fastidious over, but I think it is generally good. I think structure really helps you just flex when you need to. Like if you have a strongly structured environment, then you can, go and react to things much easier.
And then it's kind of straight to the office, I imagine, and you're working until bedtime. What's the rest of the day?
Yeah. So into the office and then typically work till 8 p.m. I try and not work too late.
Well, you got to go to bed at like 9, so I mean,
well,
you're getting up at 5:30. What time are you going to bed?
10:30. So I get up 7 hours.
Yeah. It's one of these things. Like, I'm not a morning person at all. And people who are morning people don't believe us. They're like, no, you're just lazy. And it's like, no, I'm not a damn morning person. Like my brain functions better at night.
I didn't used to be a morning person. Back in college, I was very much on a morning person. I would wake up at 9 or 8:30 every morning. I would stay up till about 1 a.m. every night. I would go to the gym at around midnight. I had very odd hours. And so that completely flipped.
I have to say, being a 9 a.m. riser in college does not make you not a morning person. I hate to break it to you, but like noon in college is not a morning person, and you mature into a 9 a.m. person in your older years. Yeah. But I hear you. Fundamentally, the point is like, it is so freaking consistent. Like hyper successful people basically all share your rough routine, and there's very little deviation from it. And it's just something I grapple with because my desire to work out in the morning is so low. Like my morning routine is I get up at like 7:30 and I just have to get outside and walk to caffeine or I will fall back asleep. Like the only thing keeping me going is like a nice slow jaunter in the sun to caffeine. And then I usually like walk around for like 30 minutes just to get my brain going. So I guess that's exercise. But the idea of like having to actually run or like lift something, like I listen to either calm music or like a podcast for those like first 40 minutes. And I wouldn't get out of bed if I thought I had to box. I would just be like, that's it. No, it's not like it's not worth it. I'm just going back to sleep.
So I think you have to find things that you really want to do.
Walk.
If it's not boxing,
does that count?
Don't. Yeah, absolutely. I think a morning walk is excellent. I mean, I love boxing, so I want to get up and go do it. And sometimes it's really cold, and so I'll kind of have a really warm shower. So I'm like feeling better about going out the day or whatever. So I think it's about, not being too like, make yourself want to do the things that you want to do. And they talk about a lot of this in high performance training, which is, for a long time, they just thought you have to be completely optimized, do 100% of the correct activities, eat perfectly, etc., for these high performance athletes to succeed. And they found that often they wouldn't want to do all of that, and that the resistance that generated versus just changing 10% of it and being like, well, look, if this is the way you want to relax or kind of recover, if you enjoy going out dancing or whatever, like, sure, it's not probably the best thing for your muscles, but overall the sustainability that gives you and your feeling of integrity and kind of full commitment to the process will lead to a much better end outcome. And I take a little bit of the same approach, I think, to building a mission-driven company over a long period of time is what we're doing, has to be treated in the same way as long-term sort of athletic performance. Otherwise, like many of the companies in the space, it'll kind of be hot for a couple of years and then you'll burn out. And I think it's really crucial to sustained performance.
So what do you do to like de-stress on the weekends, say? Do you take weekends or do you just like power through?
No, I definitely do. I usually work Saturday mornings and then Sunday mornings if I need to, but then try and take the afternoons and evenings off. And I generally try and have a day of the week where I don't do any work whatsoever. I think that's really important. And the way I relax, I'm very social, so socializing is really important to me. Saunas, I find awesome. So just literally going sauna to, a cold plunge is actually, I find, one of the most physiologically relaxing things. Exercise is great, and then of course gaming. I have to be careful because I have such an addictive personality. I can easily get addicted, and so I tend to stick to games where I'm playing with friends or they're single player and they have kind of a finite time. I would not play like League of Legends again. That is just like
I've learned
it's
I
like
can't handle
chemically addictive for me. Yeah.
Wow. So what are like the games you're into? You gave categories, but like, are there any games that you're into these days that you're playing with friends?
I've recently just started playing old school COD and Halo with some friends again, which is a lot of fun. So some of the classics. I've been playing a lot of Elden Ring. I recently finished, which was good. I found that quite hard. And I've been playing a lot of the games building on Immutable as well. So a lot of the Illuvium beta, which I'm really excited. I've been playing a bit across the ages, a few of the newer games coming out. And obviously Gods Unchained recently with daily play and earn.
I played some Gods Unchained the other day. First game
Excellent.
I've probably like ever played in that fully not just like mobile lame chick gaming like Candy Crush, which I don't even really do any of that stuff, frankly. But yeah, it was lovely. My brain is not wired, like the grooves are not there for like trading card games. I had a boyfriend in college who was into Magic the Gathering, and I played like 2 rounds of that at like 18, and it really did not stick. So
it's very much you either know the genre or not.
That's, I feel like, a lot of games, and I think that's why it's taken me so long. Not that I'm into them now, but I'm starting to try because it's so relevant to the space that I'm in and I want to understand it. But I think it's taken me so long because it really is just like, I don't even need to be good, but like there is a little bit of a barrier to entry. And I feel like there are these people who are so remarkably past the barrier of entry that I'm like, God, I have to kind of learn this whole new skill set and wire my brain. I don't know how the controllers work on like a League kind of a game. Like I don't know how any of this stuff works. So, but I'm getting there. I think trading card games is actually the place I'd want to start because it is cerebral. It's not like I have to learn like control stuff. It's like, I have to learn how to maximize my health and do damage, right? I did the tutorials.
Yeah, I mean, it's you don't have to be you don't have to be reflexively talented. So there's
Correct.
no
It
sort
doesn't
of
require hand-eye
real-time maneuvers.
coordination. Yeah.
Yeah,
Yeah.
So a lot. I
It's
think
a
that's why
mind
it's so
game.
accessible, and Hearthstone became one of the most accessible games all time when it launched. Was mobile, very easy to play. There's no real kind of skill barrier to entry. So I think they'll be around for a very long time coming.
Okay, last topic before you have to get on to your busy life. There's been this royalty debate happening recently, primarily in Ethereum. We saw SudoSwap make the move to a zero royalty marketplace. X2Y2 decided to make the move to zero royalty marketplaces, or to be a zero royalty marketplace. What is your take on all this?
I think it's really interesting. I think the most important thing is that the commitments that we make to creators, or the commitments that we make to the developers, and the commitments we make to end users and players is consistent. So if we say, hey, this is going to be X% royalty, then that is what we can guarantee, for those creators, but also we can guarantee at a maximum for those end users. You can always obviously take it down. And I think that a whole part of the value of how business models in the future are going to exist is, let's take the example of Magic the Gathering. There's more than $20 billion of Magic the Gathering cards in the world today, roughly estimated. So insane, right? And if MTG could monetize based on taking clips on when people trade, that is probably a much better business model for both of them. They don't have to create new cards which depreciate the value of all cards by being far more powerful. They can have long-term incentive alignment. So they're both trying to grow, well, how big can this economy get? How can we add more value to the cards? And so that's why I think royalties are a really important primitive in the ecosystem. In Immutable, you can't get around the royalties. And so the most important thing is that we align those commitments between end users and developers, but then, no matter where they trade, all people can always get access to that. And they can also be streamed to multiple parties. So you can have the creator of an asset inside a game earn royalties, the creator of the game itself, the publisher earn royalties. The marketplaces can take their own fees. And so I think it's really just, well, this stuff is going to be market-led. People are going to decide what fees they tolerate versus not. So make sure we have great standards for what is going to be consistent protection versus what is not. Yeah.
Did you just say that you can't get around royalties on Immutable?
That's right.
Wait, that's huge. Can you explain how
Sure.
that works?
Well, it's pretty basic, right? Because it's an L2 rather than sort of a smart contract enforced royalty, which you can just write another smart contract to get around. And we learned about the perils of that pretty early on, because we had God's Unchained referral schemes where if you referred someone, you got 10% off packs. Pretty much next day, someone made gudiscount.com, where they made another smart contract, which just made yourself the referrer, and then they gave you 9% off the packs, and they took 1% for themselves. Right, so like when it's kind of open and permissionless, and there's a little protection against Sybil attacks, there's easy ways to do this.
And also, you can't really seem to enforce it at the smart contract level, period,
Precisely.
because you go on a marketplace that, it's exactly. Okay, continue.
And so what we do is, because this is being run by zero-knowledge rollups and essentially sequenced in our layer 2, we can ensure that no matter where they trade, it's not being enforced by a smart contract. It's simply an inherent part of the way that the protocol and the collection is defined. And so there's no way to sort of write your way around it. It's just the way the system works. And we can create guarantees over what those royalties can be, so that you can have full-on commitments of this is, for instance, the maximum royalty a collection can ever have. But importantly, you can't get around that. And that's one of the more main propositions or value propositions we have to large IP holders, creators, games. I actually think it's core to the success of the industry. And I think it's quite short-sighted to say, well, if it can be done, then it should be done. There is the promise we're making to creators and the promise we're making to games is, hey, these are the new ways you can align incentives. And I think we have to make sure the technology works.
So this is like huge to me, and something that I feel like was under discussed when this was like topic du jour in like Ethereum NFT Twitter, because we're never going to be able to 100% get around this problem, right? Like if people want to have some sort of private sale on the side, that they can do it. Like, we're not going to, the reality is we're not going to be able to totally eliminate the problem of people not paying royalties if they want to not pay royalties. So my take on this has been like, we just need to make it really inconvenient, and accept that there are going to be people who are going to fall through the cracks and do it the way they want to do it. And if you buy the premise that the majority of NFTs that get traded in the future will probably not be on L1, and I fully buy that premise, like, this is a beautiful thing you're saying because it just means that it's going to be even additionally inconvenient. I mean, in theory, right, somebody could take their NFT off of an L2 onto Ethereum mainnet in order to do some royalty-free trading.
At that point, the value that we're giving is clearly not there. So, like, I think the fundamental point is we have to be delivering enough value that people are happy to pay these. And I think that is the case, especially when you're doing the majority of trades. Obviously, if I don't know, you're trading a $100 million asset to a friend, you may not want to pay royalties on that. You may want to just transfer that asset to them, and that's fine, but you don't get the benefit of using the network, having the existing liquidity and having the security. And, we're very likely looking at ways where we can be sort of improving incentive alignment for all parties in the long run. Because that's what it really comes down to, is like liquidity and incentive alignment and allowing people to build the best businesses that they can, and players to have the best experiences that they can.
Mm-hmm. It's interesting because one of the takes that was coming out, like when this first all was breaking and people were really coming to realize that, oh, wow, we can't enforce royalties at the smart contract level, was, okay, maybe we can just make it like culturally accepted the way that tipping is, especially in the United States, where nobody's, arresting you if you don't tip, but it is, most people do it, right? Because it's what's culturally accepted. And I was pretty skeptical of that view. I know Punk6529 had put that out there where I was like, yeah, it's not the same as tipping, where like your waitress is right there and can, spit in your food or something. It's very different when like you can be anonymous on the internet. But what's striking to me is that since X2Y2 has initiated the zero royalty policy, the share of sales that happened for Bored Apes and Mutant Apes actually went down on their site. And it's like pretty clearly initiated when they put that through. So that makes me optimistic that it is something that we can culturally enforce, and that specifically maybe on the buyer side, you can enforce
remember it. Remember that it's a really short-term gain as well, because Bored Apes, if you think about the way that royalties are often going to be set up, it's going to be revenue and funding for the DAO or for the infrastructure that is built in a long-term project. Like the perfect example is, Alluvion, where 100% of the revenue goes to ILV holders, and is going to be fun. Like all of this stuff is going to be used to build these projects in the future. And so I think the economics just has to be set. And if we say it's going to be fixed and that's what everyone agrees to, we should develop the technology to make it so. I mean, no amount of cultural, like even if it works with the current crypto user base, when this stuff gets to 1 billion people, they're not going to be like, I'm going to pay this out of the goodness of my heart. It's just going to be, this is the way the system works and I'm getting value for it. I think it's an incredibly important primitive.
Totally. And that's been my other cases. Like, I don't think people are going to do it because it's like tipping, but like if you're a buyer of a project, you want to see that project succeed. So like in theory, you're the one who should be incentivized to only buy from a seller who's honoring royalties, because you're now invested in that project and want to see its long-term success. Why wouldn't you want the project to get the stake it's entitled to? So, or it feels it needs to continue operating. Awesome, man. Well, so much fun as always. And we'll be back in a couple weeks. Justin Hulog, I'd been tweeting about it. We had to push back the episode with Justin, but Justin's the head of game studio at IMX. Hence my studying up on all things gaming and trying to really sharpen my
You'll really enjoy the
knowledge.
chat with Justin. He's a very, very clever guy, and I think has a very big vision for what we're building with Immutable Studios.
And also so fun. I met him in person during NFT NYC, and he was, I like to think that I saved him from Times Square, where like, that's where all of the stuff at NFT NYC was happening. And I was like, I've got a party in Brooklyn. Like, why don't we take our meeting in an Uber, like going from Times Square to Brooklyn. So we spent like an hour in an Uber meeting to get out of Times Square. So he's an awesome guy. Cool. Until next time.
Thanks, Carly.